Welcome back to MarketSnap, your daily pulse on the markets. Today's session had a little bit of everything: a crypto breakout, a retail blow-up, and a bond market drama that's got the big money nervous. Let's get into it. It was a day of two halves. Tech found its footing after a rough stretch, but the real story was the tug-of-war between surging bond yields and a market that's refusing to roll over. We're breaking down the winners, the losers, and the one number that could decide the next leg of this AI trade. Let's start with the tape. The S&P 500 managed to eke out a gain of about 0.33%, closing near 7,677. The Nasdaq was the relative outperformer, up 0.66% to 26,151, as some of the selling pressure in tech finally eased. The Dow lagged a bit, but still finished in the green, up 0.3%. And the Russell 2000 showed some life, adding 0.5%. The VIX, meanwhile, pulled back over 2% to 15.45, a sign that some of the panic from last week is starting to fade. But the real fireworks were in individual names. Robinhood absolutely ripped, surging nearly 14% on the day. That's a massive move for a mega cap, and it tells you that the retail trading crowd is back with a vengeance. Tesla also had a strong session, up over 5%, as risk appetite returned to high beta names. We also saw strength in the commodity complex, with Southern Copper and Freeport-McMoRan both jumping over 8% and 7% respectively, riding the wave of higher copper prices. On the flip side, it was a brutal day for some former high flyers. Alibaba got hammered, dropping over 8% on renewed fears of U.S.-China tensions. Marvell Technology also took a hit, falling over 5% ahead of its earnings report later this week. But the biggest story was in retail. Dick's Sporting Goods cratered by a staggering 27% after slashing its full-year outlook, blaming increased promotional activity in athletic footwear and apparel. That's a stark reminder that the consumer is getting more selective. Zooming out to the megacaps, it was a mixed bag. Nvidia was slightly lower, continuing its 7-day slide into its earnings report. Apple and Amazon were also marginally in the red. But the standout was SpaceX, which gained over 2%, after announcing plans to build a massive new spaceport in Louisiana. That's a $100 billion commitment that shows the scale of ambition in the private space race. Looking at the weekly picture, the debasement trade is clearly in full swing. Bitcoin is pushing back towards $80,000, and that's lifting the whole crypto complex. Coinbase is up over 23% on the week, and Strategy, formerly MicroStrategy, is up over 25%. We're also seeing a major rotation into gold and silver miners, with names like Kinross Goldfields and Wheaton Precious Metals all posting massive weekly gains. On the other end of the spectrum, the AI trade is seeing some serious profit-taking. CoreWeave is down over 17% on the week, and CrowdStrike has fallen over 15%. Intel, ARM, and a host of other semiconductor names are also in the red. This looks like a market that's questioning the valuations of some of these AI infrastructure plays after a massive run. And that brings us to the elephant in the room: earnings. This is arguably the most important week of the season. All eyes are on Nvidia, which reports on Wednesday. The whisper number is huge, and the stock's recent slide suggests the bar is set incredibly high. A beat might not be enough. The market wants to see guidance that justifies the massive capex cycle. We also have Marvell on Thursday, which is seen as a key barometer for custom AI silicon, and keep an eye on CrowdStrike and HP later today. You can find exclusive earnings transcript summaries on MarketSnap. Sector-wise, the rotation is clear. Basic materials is the top performer this week, up over 2.5%, as investors pile into hard assets. Healthcare and energy are also showing strength. On the flip side, technology is the worst performing sector, down nearly 4% on the week, with utilities and industrials also lagging. This is a classic risk-off rotation within the market, favoring value and commodities over growth. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown helpful, make sure to hit that like button and subscribe. And don't forget to check out our exclusive SWOT analyses on MarketSnap to get an edge on your next move. We'll see you back here tomorrow for another deep dive into the markets.